Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at SPY on the daily and weekly time frame, so a close at the all-time high and continuation. So what occurred today is we had Yellen speak at 10 a.m. Eastern, and she's doing the same tomorrow, so we need to be aware of more volatility coming. But what it did was it started with the S&P 500 seeing some weakness, and the financial sector XLF exploding to the upside. Now, as SPY was seeing weakness, we've been watching this correlation between XLF, the financial sector, and the S&P 500 since the election, and it's been an extremely strong correlation, and that's because the financial sector is the second highest holding in the S&P 500 behind the technology sector. So when the financial sector was breaking out and the S&P 500 was lagging behind a little bit, not really seeing any upside, that made me believe that we were not going to see any kind of dump on the S&P 500 because the financial sector was so strong. And then the bulls turned things around in the S&P 500 and started to follow the financial sector again. And what that did was led us to higher highs. We never broke the low of yesterday. We've seen higher lows now 4 days in a row, close at the all-time high. And we were looking for some consolidation due to the 3-gap up pattern, which it looked like we were going to get. But again, the catalyst of Janet Yellen speaking, rocketing the XLF sector to the upside, the financial sector, and carrying the S&P 500 with it. So here we are, all-time highs, bulls still in full control. Weekly time frame, same story. Higher lows and higher highs, bulls in full control this week, only 2 days so far, but no sign of the bears for 5 days in a row. And you look at other markets, you look at QQQ and IWM in the market rundown. QQQ is on fire even stronger than the S&P 500. And we know we're due for consolidation, but we're not going to be giving the bears any credit. They have to prove to us that they are in control in the short term, and they have been unable to do so. So checking SPY on the shorter term time frame, we can see that weakness right out of the gate where we were pulling back and forming lower highs and lower lows. And then what happened? Yellen started speaking at 10 a.m. So we didn't see much upside, but we had the low of the day at 232.17. And then we had a double bottom at 232.16 by 1 penny. And you can see the volume fairly high on those candlesticks as the lower wick show the bulls buying the dip. Then we broke the lower high pattern and the bulls took over again with a complete breakout to the upside and an extremely strong close at the end of the day. So on the weekly time frame, or I should say the hourly time frame for the S&P 500, a full-on recovery, all moving averages back as support including exponential, and no sign of the bears. So we're going to be watching this support now. 232.16 is a double low. So on any kind of consolidation, that will be a support level we look to. And in terms of resistance, we have the high of after hours, 233.94, 234 psychological. And we'll see how much upside the bulls have at this point. As long as they hold the daily upper Bollinger Band, which has been support for the past 4 days, they remain extremely strong and we will not see much consolidation. So again, Yellen speaking 10 a.m. tomorrow Eastern. Need to be aware of that again because that was a catalyst in the dollar, gold, and the financial sector all at the same time. Not so much the S&P 500. We didn't see a huge reaction like we did in those other 3 things I just mentioned. So we'll check back in tomorrow and see how it reacts again tomorrow. I'll see you then.